Hi everyone, this is Paul Lang from DTS and I want to introduce you to what you're about to watch. It is a 30-minute long event known as an impromptu session that was presented live to the free members at Discipline Trading Strategies. It's called Bullish versus Bearish, and I'm going to take a look at two different concepts, and one of them is going to be a very nice little educational technical lesson for everybody. Naturally, this is a very important little piece of information, but it's one small piece of the puzzle to actually learning how to trade and invest for yourself. If you enjoy this, check out the many other educational events, articles, and Trade of the Week videos that you can get access to at the DTS Free Stuff page. So for now, sit back and enjoy this event. Whoa, good evening, everybody. I actually scared myself. I wanted to scare some of you, and I actually scared myself because my speaker was on super loud. How's the sound? And welcome, everybody. We all set for tonight? All right, got to get right to it. This is a impromptu, as I call it. Basically, the first Wednesday of the month, typically, sometimes the second one, I do the full event where it's an hour-long presentation. Usually have a hard time getting done in an hour. And then these impromptus are just what they are. Like a day or two before, if I get some stuff to talk about, I'll throw some things together, do a half-hour presentation. We hold it to 30. Hey, Debbie, we'll hold it to 30 minutes. Boom, 31 minutes tops. So we can all get out of here and move on. And a lot of times, like tonight and like the last one, I get 2 or 3 little topics. You know, I always have a list going of things to talk about that it might be an email, maybe a presentation, maybe something for the seminar students, whatever it is. And then I had a couple things, instead of saying an email, I said, hey, these are good topics to get together and talk about. So that's what we're going to do. So let's get going. Bullish versus bearish. You probably don't know a whole lot what that means until I get into it. That's the point, though. A little quirky title. You're not sure what it means. I'm going to talk about 3 things. Number 1, a quick little bonus topic here. I want to talk real quickly about me doing guest events real quick, just because I got a couple of questions on that. Then I want to talk about the first bullish versus bearish topic is perma bulls versus perma bears, talking about traders, people. And then the second bullish versus bearish is your day trading bias versus your midterm bias. I'll keep it to 30 minutes. Let's get going. And a quick reminder, because tomorrow, day after today, July 31st, is the summary version of the Introduction to Mastering Technical Analysis course. I know some of you get a little mixed up on this, but about a year ago now, maybe not quite a year, I added a day to the seminar program where normally the seminar students, we go through about every 6 to 8 weeks, we go through 3 Saturdays in a row where I'm teaching the 3 live courses. And I added, didn't replace, but added another day in between where I'm doing a 1-day summary, which is mostly intended for those that have been through the course a couple times, a review, a chance to ask questions. I don't recommend, if you sign up for the program, that you attend that first. I don't recommend that at all. I would oppose that. But if you ever do sign up, you have the home study to study for several days, weeks, whatever, until the next set of real live courses, which is September 6th, I think. Okay? So just a reminder, tomorrow, free event, 5 o'clock, 2 hours long. I made it 2 hours because I can't get through it. All right, we'll quick topic here because I got this question. I've done in the past, I get invited to do guest speaking events. There's places that host events, neutral places like Market Takers and a couple other names out there you probably heard of. Most of you have probably attended one or more of those. And I used to attend one of those. I get invited to speak, and I maybe every 3rd month or 4th month. And I stopped doing them a couple years ago. And I want to explain why. I'm always a little torn because I got reminded about this because somebody just recently, and I'm sorry, I don't remember who, but somebody just signed up for the long-term letter or maybe even the summer program. And they said they found me because they were listening to an old webinar event where I was a guest speaker. And they heard me and said, oh yeah, wow, and followed me to the site and liked it. So I like that packed. Oh, that was you. Okay, Debbie. It kind of reminded me, I haven't done them in a while. And I have to tell you the other side of it. The reason, does anybody know why I don't do these? I have only like a minute to spend on this to keep up with the pace tonight. But anybody know why I don't really like doing these? I mean, I'm torn because, Debbie's here because she heard me talk, and that's why I do them. But I've turned down the last year and a half or so of talking at these. Anybody know why? No, they don't make me do a sale. Yeah, I don't do any sales. I announce clearly when I do my thing. Debbie will tell you. I have nothing. First thing I say is, because everybody's doing some stupid sale, first thing I say is, I have nothing to sell you. But it's be honest with you, because some of the guests on there, I'm just embarrassed to be on the same stage as them. It's like it's one speaker after another all day long. And whenever I've done them, I've looked at the guest list and tried to make sure, because I know there's a few people I consider to be too scammy to even, I don't want to talk in the same venue. And a lot of people I don't know. And then, the last couple of times, like I'm on after this guy I'm basically coming on. It's kind of funny because I'm basically coming on and saying, just the opposite of what he says. So all this, he's selling technical indicators, so I'm in there, and part of my presentation at the time was, technical indicators are all crap. So it's kind of an awkward thing. And I just, they appear to me to be more of a scammy event, So I may do another one next time they ask, but there's 2 or 3 places to do them. So anyways, that's why I haven't been attending them. I just am a little, turned off by them. But then Debbie wouldn't be here if I wasn't doing them. So we'll see. So anyways, that was a quick little side note, nothing to do with anything. So number 1, perma bulls versus perma bears. What are we talking about here? Every good trader should be like water. Who says be like water? Most of the guys will know this one. I don't know if any of the girls will know. Yeah, Bruce Lee. Be like water. And in trading, that's really a good expression too. It means be flexible. It means, be what your container is. Be what the market tells you to be. Don't have a preconceived notion. So many people, and I've done a couple of presentations, a couple of great presentations. Matter of fact, I think I started a new thing on the free stuff page where I bring back an oldie but a goodie. I think the one I just brought back was about perception, right? Perception is really a big thing in trading, and a lot of people have that preconceived bias, and then they look to justify their view through selective perception. In other words, if you think the market's going to drop, you will just factor in every little thing you can that's going to be a bearish event. You ignore the bullish things. Selective perception. You can't do that. You have to be very neutral. But the truth of it is that almost everybody has an inherent bias. Some people just think the market should just go up forever, and you can't even imagine why it would stop. And some people are bearish anytime the market rallies more than 10% and say it's going to crash. And it's kind of okay to have that bias because you really can't deny yourself that. It's like when we talk about psychological issues. I don't teach people to get rid of their psychological feelings because you can't. Rather, you have to learn how to deal with them. And it's the same thing here. You may be an inherent bull or an inherent bear. And I don't know, they're pretty well split, I'd say. I think it changes as the market moves up and down. And when you get a huge bull market run, you get more and more people that become kind of bearish. And usually unjustifiably so. But it's okay as long as you recognize it. But here's a comment that I have for you, here's a comment I have for you that may kind of surprise you a little bit. First of all, this is a subjective comment on my part. As you know, I try and always let you know. And when I talk about most things, I support it factually. And I always say in a way that when I'm done talking, you can't even argue with me. There's nothing left to discuss. I just prove my point if it's a factual point. This is not that. I have no scientific objective proof of this, but after talking to many wannabes and working with students, I feel this is an accurate statement. If you took a group of perma bulls and a group of perma bears, perma bulls and perma bears, who do you think, I'll ask you, who do you think over the long haul actually ends up being the better trader? By the way, while you're answering that, I was a little disappointed in a lot of you. I was a little disappointed. You know why? I don't mind if you ignore educational emails. That Dog University email went out, and I thought that was the cutest thing in the world. And I got just a handful of comments. And normally I get more comments arguing with me about whether or not a moving average is valid or not. Really disappointing. Yeah, I didn't get any feedback. Very disappointing. That was like the best email sent out in 5 years. Anyways, and no, we're not taking any new canine applications at the moment till we get the current crew straightened out. So most of you said bulls, all of you said bulls. And like so many things in trading, sometimes I, after a long period of time, develop kind of a reverse attitude. I believe that over time, the bears will do better. Now, this isn't just a guess. This is observation. This is me understanding people. This is me over a long period of time. Bullish people, how do they deal with things? Bearish people. And here's the reasons why. And do you even want to guess why? I mean, here, it says right on the slide that I think the bears will do better, which of course is counterintuitive since bull markets are longer and stronger over time. The market is up 90% of the time time-wise. It's up, every, whatever the stat is, every 25 years, the market's never been down, whatever it is. And every bear market has been overcome and makes a new rally. All that good stuff. So why in the world would I possibly think that bears do better? Over time. Over time. Bulls are, wow, Eric, that's like a perfect answer. You even said bulls, but you read my mind. I'll have to stop right there and just go because you really kind of gave my answer right there. Here's why I believe, and this may help some of you to recognize this. The important part of this slide is to understand that maybe this describes you, and you may not realize it. In a crazy bull market, and this is a famous saying that goes back, the bears have all the logic, all the objective reasons, all the proof that prices should not be where they are. I mean I don't mean like just in one bull market. I mean over time, over your career, over a span of a bull and a bear market. Prices go up, prices crash. Where does everybody stand? There's always this famous saying out there, that in any kind of a bull market, the bears always sound smarter. The bears have all the facts. The bears have all the proof that there's no way prices can go higher, but prices do go higher. And the one thing the bears don't have is the money, because the bulls are making the money just through relentless blind following of the bull market. Bears always sound smarter. You ever hear a debate? Bears always sound smarter. They always have the reasons the prices can't go higher, but yet they do somehow. The bulls always end up being right, and they get complacent. Bears have to adjust, and they have to learn to live in the crazy bull market world. Now, here's the thing. They're living in a world they don't like 90% of the time. Obviously, if they don't adjust, they're gone immediately. But most bears just have to face up and understand, okay, fine, hard to believe it, but, I'll keep pushing the button bullish, keep pushing it bullish. But what happens then is when things do crash, they're mentally ready for it, right? They're like, okay, it's over. Get rid of these longs, get some shorts, let's get going. And while the bulls do well most of the time, because we're in bull markets most of the time, when things crash, they do not believe it, they do not accept it, and they often get killed. Is that good logic for you? Now again, I don't have any stats. I don't have any stats for this. This is just me, long period of time, and I truly, truly do believe that. I do believe that for the most part, in my training people, I kind of feel that slightly bearish people are easier to train. Comments? Feedback? Rebuttal? Why is this important to you? Well, absolutely. You're absolutely right, but that's what I said in the very beginning. Right, my first thing was we all should be like Bruce Lee, be water, be flexible. But my point was that we all do have, inside of us probably some kind of a bias, right, where we things are. What I've asked people to do in the past sometimes is a little test, is I'll have them do 2 or 3 things. But one of the things is write a quick little market synopsis of where you think we'll be in 5 years. Where we'll think we'll be in 5 years, right? And where do you think the market will be in 5 years from wherever you are? Probably gives you some indication of where you are, because you don't know. I mean, the only way to know is we take charts a day at a time, a week at a time, as a day trader, a 5-minute bar at a time, whatever it is, and it all depends how things develop. I could have a very bullish attitude today, long term, and it could change in 2 weeks, completely change. So we take it all as kind of a bar by bar thing. So to say 5 years out, you just don't know. You can't predict out that far. So whatever that was, it kind of may give you an indication of what you think. So I bring that up because it's naturally an important thing. I have to tell you, I have seen many people just really, really get hurt in bear markets, really bad. Like give everything up, all the profits from years and years given up in 2 years because they just didn't know what to do. So I just want to remind you, and I'll kind of close this section with this quick little comment. What are the odds the market is going to have a pretty bad crash in the future? What are the odds of that? Anybody got odds for me? From 0 to 100%? Yeah, it's 100%. There's a 100% chance we're going to have a nasty crash. The question always is when. The market has to crash. It's a mathematical certainty. It is a Ponzi scheme, and nothing wrong with that. I'm not knocking it. I'm just saying that's what it is. You have to understand that, and at some point it'll be a bad crash. So you just have to make sure you handle it properly when that does come. Unless, like I always say, if you're young and you just started putting money in the market 10 years ago and you're just going to hang on for the next 30 years, okay, I mean, that's one way to do it, that's fine. But if you're playing a little catch up, you just got to make sure you manage things, right? We're still heading up and things are extremely bullish, but at some point that can change pretty quickly, all right? Because of the fact that it is like a Ponzi scheme, we run out of money. There's a fixed amount of money in the world, at least theoretically. And when every penny is in the market, when every person puts it into a fund and the fund puts it in the market and the people put it in the market, you run out and then you get the snowball effect, right? Say everything's good, why aren't we going higher? Well, there's no money. And then once you start to drop, snowball effect begets more selling and we crash. So let's move on to the next one here. I think I'm on the next one. Day trading versus midterm bias. I've got 13 minutes to finish this up. That's plenty of time. But I do want to ask you questions on these charts as we go here. Question number one, everybody, true or false? Here's a daily chart of the market as of today. I call that a power trend. I call that a power trend because what that means is that the chart through here at least is so tight that there's no setups in there. There's no consolidations, there's no pullbacks. It's just bar after bar after bar going higher. That's bullish, obviously. But here's the question for you, true or false. This means as a day trader, we should have a bullish bias, true or false. And this is where I am going to prove this one to you, but it is absolutely false. It is false. And let me explain why. Quick explanation, but then I want to run through a couple of examples for you. The daily chart plays a role in the bias of the day trader, but only as a secondary role to help understand the chart that matters, the hourly chart. Let's do a couple of questions here real quick. Here's a 5-minute chart of the market. 5-minute chart of the market. Just answering the questions here. Do you think this is a good long entry? Give me some positive things that you like about that as a long entry. And bottom line, yes or no, would you take it? And even if you don't love it, give me the positives that make you say, okay, rising 20, excellent. We have a rising 20. These are the 20 and the 40 simple moving averages, if you care. So good, there's the thing. We have a rising 20. Okay, it had gapped up, so we have some kind of bullishness going on. All right. Bottoming tail bars, okay. I mean, these are all, I'm just asking you to list things. I'm not necessarily agreeing or disagreeing. Besides VRL, who else? What else we got? Anything else on this one here? What do I put for predicting things that you guys might say? It's kind of and we kind of have what some of you may call a buy setup, meaning we traded above the high of a bar right in here, right? Above the rising moving averages. A good entry, would you take this entry? Well, don't get all intelligent on me, Steve. Wouldn't take this one? Would wait for a second entry. Could use, so if you use a tight stop, does that mean you would just stop out and lose your full risk amount really fast? Or does that mean you would risk less money? I never am quite sure what that means when somebody says a tight stop. Because a tight stop to me would be the backwards of what you want to do if you're not sure about something. But anyways, I will move on. So buy setup, okay, so that one ends up not working and we do come down. And here somebody very intelligently said, wait for the next one. So that one kind of faltered a little bit. And now that was too soon. Now, how about now? How about now? Would you take it here? And or what are the positives about this potential setup now? Go ahead, go. Come on. Everybody besides Larry and VRL, and would you take this one? And what are the pluses or minuses? I'd pass. Okay. Well, you said you'd take the next one, VRL. This is the next one. You can't keep going. I pass. You said you'd take the next one. New low was bought kind of. Okay. So Eric. All right. So Eric makes a good point. That's an excellent point. Debbie would take this one. And Eric's point was that, hey, we kind of made that new low where you thought we're going to hold, but it snapped right back. Okay. Breakout fails, sort of. Okay. I'm not really sure. Yeah, well, that's okay. You can call it whatever you want. So buy setup above the rising movie. And here, nobody mentioned, right at the rising 20. Right at the rising 20. So if you like this one, it didn't work. We come all the way down to here. That was too soon again. But now, by the way, there's a great reason we're doing this. Hey, Jed, how you doing? How about now? How about now? Now, I know you might have got sucked in before, but now maybe you just woke up and you pulled up to the screen. You woke up, boom. Ooh, declining 20, but on this time frame, right? What about the 15-minute chart or the 60-minute chart or the daily chart? I mean, if you liked it up here, VRL, weren't we here even? Were we below a declining 20 on the 1-minute chart? Why didn't you mention that? It's not on the screen, of course, but why didn't you mention that? We're below a declining 20, right? So you're just, you're picking random moving averages, say, oh, above, below, but, it all, kind of time frame relevant. I don't want to really argue or get into it here. I just want your comments, so keep them coming. What about the gap fill? Anybody like the gap fill? Is a gap fill support? Everybody? Is a gap fill support? A gap fill in a vacuum absolutely is not support, no. Now, a gap fill oftentimes can be support if there's something else there, which sometimes happens when you fill the gap. But a gap fill by itself, there's absolutely no support there whatsoever, right? Exactly, Eric. Perfect answer. Yeah, exactly correct. So even that just went nowhere. I mean, if you got in over that bar, you got in at the high of the rest of the day, it just fizzled the rest of the day. Garbage. Here's the next one. So here we ran up a little higher. The first chart here, we ran up for 5 minutes. Here are the opening bars. This is a 5-minute chart again. We ran up for, like 35 minutes or something like that up to here. And now we get that first pullback. How about this long entry here? This is a little different than the last one. Do we like this long entry right here, everybody? And again, pluses or minuses. Wide stop. Okay, that's a good point. Wide stop. Of course, a wide stop would mean it's more likely to be successful, right? Even though you would make less money probably, however you do it. Right, exactly. Always the trade-off, right? All right, so it's again, we have kind of a buy setup that formed above the rising moving averages. We came down with the big bottoming tail, nice bottoming tail at the rising 20. A lot of positive things about that one. Now here, if you took it, it didn't really fail yet, right? I mean, you'd have your stop here. But how about this for an alternate entry? Because now we're making, what would you call this in here as compared to this? What would I call it? What would you call this? Right, a higher low we're making in here, right? A higher pivot low. So that shows some bullishness, people stepping up here to buy that, right? So would this be a good entry now? Does it bother you that we went below the rising 20 VRL? Does that bother you? Could work, not for you. Well, what did I say here? Buy setup above the MAs at the rising 20, nice bottoming tail, higher low forming. Okay, so a lot of good stuff, but we're still not really sure. All right, well here, okay, so now there we go, bam. Just like the last time, kind of collapsed. There's your gap fill bottoming tail. Now, how about now? Do we finally have the right entry? And again, maybe you tried one of those others that didn't work. Maybe you waited for this one. Maybe you knew to wait. How do we like this? How do we like this one here? My timing should be perfect on this. I think you guys are going to go. When I get to the 5 minutes from now, I want to hear some light bulb, LBs. You know what LB means? It means you had a light bulb moment. Because based on the answers here, I think there should be a lot of light bulb moments here. Well, I put buy set up above the rising moving and at the rising 20. Nice bottoming tail, bottoming tail, and the gap fill. Boom, 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 boom. So there, but look what happens. Maybe, you made up a little bit, but, would you have taken profit on that? I mean, you weren't even at a 1 hour profit probably. Fades away the rest of the day. Just kind of a sloppy mess, right? So what's the point of all this? The point of this is that I was, putting stuff on the slide and playing along and getting comments from you. Only a couple of you did incidentally mention, I think Steve mentioned, the real answer. And the real answer is all of the stuff we just discussed, everything, the rising 20 and wide bars and bottoming tails, it's all crap. It's all completely irrelevant. Why? Yeah, because this is the time frame you're playing in. See that hourly chart? There's what you're playing. Now, yes, the hourly chart is uptrending, correct. But does that mean, let me ask a question first. Did I draw this top silver line correctly as a, ready for this term, upper trend line? Did I draw that correctly? Did I draw the bottom one correctly? Should the bottom one go to the bottom of these tails? Or should it just go to the body? And same thing here. Should I include that little pop or should I ignore that? And should I bend it to hit the top of that? Only the shadow knows. Boy, that was like a radio show or something? Therefore subjective. Yeah, very good. If you're even thinking of the answer to this question, you don't know what you're doing. These are meaningless lines. You can draw them any way you want to. The only way to cover a short is a long. What? It has something to do with the shadow nose? These are just guidelines. These are just like the kids, in the bowling alley, you put up those things. There's no great relevance, but here's the relevance to me, even though, see, it doesn't matter where you draw them, but here's the point. If you called your 8-year-old into the room and said, look at the computer screen, and said, right here, honey, is that closer to the top or the bottom? What would she say? Because sometimes that's how much brains we need is right, closer to the top. So do I want to be going long here? Do I want to go 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 long here? Well, you see that right there, that star? That is this 5-minute chart. That is that. That was yesterday. So do you see the point? This whole chart is a short. The whole chart is a short because the 5-minute chart in a vacuum is irrelevant. And this is where I said I sent that email out. There's a great lesson in here today. And this is it. And if you're not a day trader, guess what? The same thing applies to the weekly chart if you're a long-term trader, right? If you're going long in a weekly downtrend, if you're going long at the top, even in a weekly uptrend, if you have this situation on the weekly chart and you're going long up here on the weekly chart, guess what? You're not doing it right. So there is no, so that whole 5-minute discussion, it's all a moot point because none of it should even be asked because none of those are buy setups because they're all shorts. You know what I meant to put in here too? I write a market letter every day, and the last 3 market letters, Eric, I think you get it. What has the bias been the last 3 market days? Yeah, well, this was yesterday. That was the last day, and then the day before was right here. I'm going to do it right here. Here's the day before, right there. Now that one is maybe a little more question, but Eric, last 3 days in the market letter, what was the bias been? Yeah, short. 3 days in a row, short. Why? Because we're opening up here, or short the rally into that area, right? So, you know, the dumb 101 view is, oh, we're in an uptrend, you got to be long. No, that's trading 101. That's just, now, you do want to be long. The perfect situation is being long off the bottom of these areas. That's what you want to be. That's ideal. But when you're up here, I like to short that. You can just wait for the bottom, but you don't go long here. So you see the point that this whole conversation, you're trying to go long that 5-minute chart in there, right? Remember, that's what I'm looking at right there. You're trying to go long this chart. That's why it's not working. Because the 5-minute chart is the tail, and this is the dog, and the tail doesn't wag the dog normally. And then for the prior day, this day here, the first chart I showed you, that star right there, that's the 20. Oh, I have them backwards? I have them backwards. Yeah, it doesn't matter. They're both 5-minute downtrending charts. And then, of course, this is the other day right there. Now, the question on this day is, are those the lines that matter? Or what happened? I had other lines. I lost them. Oh, well. I had another line come in here. I messed something up. Or, you know, does this line matter? Well, I got to tell you, you know, I'm not going to go long here, right, hoping that I get back to here. So, and that's where you wait for confirming setups. You wait to see what happens. You wait to see which way it's going to go from that point. So, you know, if a couple of you knew to not even answer the questions about the 5-minute chart, because it's all a moot point. You can't look at any chart in a vacuum. The number one definition to me of trading is looking at the battle between the bulls and the bears across the 4 pertinent time frames that matter for any trade that you're taking. And if you don't do that, you don't have step 1 down in trading properly, according to me. Questions? It's 5:31. I said I had to be done at 5:31. Any questions? Questions I'll allow for if you got any. I didn't see any light bulb moments. It's a simple concept. It's one of the ones I teach in the seminar program. It's a very simple concept, obviously, but it eludes a lot of people. Tomorrow, right back here, same time, same place for Introduction to Mastering Technical Analysis. If you've never been through that, this is an actual course. That's the first part of the seminar program. It's all good information. I don't care if you've been around the market for 10 years, if you've never seen this course. You will learn a few things. And don't forget, if you haven't seen it, if you go to the homepage of DTS, there's a page there called More to Do. And you can catch up on podcasts there or catch up on recent educational articles. Thanks, Eric. Anything else? That's it. We're up for our 30 minutes. Hope you enjoyed tonight. Got a little something out of it. Any little, you know, any little nugget of information, they all add up over time if you're trying to do this on your own, or if you're a seminar program member, there should have been boring old information to you. All right, if you're in the room, we'll see you in the morning. And if not, I'll see you tomorrow for the Introduction to Mastering Technical Analysis course. Have a good evening, everybody.